It's 5 o'clock. Good afternoon and welcome to LJ News. With tax time fast approaching, the ATO has warned Aussies that they may get less than they were expecting on their return this year. The Australian Taxation Office says a moratorium on debt collection is coming to an end as the country emerges from the COVID-19 pandemic, meaning taxpayers with outstanding bills may have an amount deducted from their refunds or other credits with other agencies. During the early days of COVID, the tax office shifted its focus away from firmer debt collection to assist businesses and the community. That's pretty much gone into reverse now. The ATO takes the view that we're heading back to normal, COVID's done and dusted, therefore it's pursuing small business tax debts, said H&R Block Director of Tax Communications Mark Chapman. Mr. Chapman said the debt collection will be a big priority area for small businesses. We understand that a lot of people, especially small businesses, have done it tough through COVID and may now have a tax debt, ATO Deputy Commissioner Vivek Chaudhary said in a statement. Our message is, don't stick your head in the sand. Even if you can't pay the full amount owed straight away, please contact us or your registered tax professional to discuss, and we will work with you to set up an appropriate payment arrangement. Mr. Chaudhary said it was possible for the ATO to arrange support and assistance, but only if the taxpayer or their representatives talk to us and respond to our calls. We cannot help taxpayers who do not engage with us, he said. If taxpayers don't pick up the phone, the ATO has warned of firmer actions. Those include garnishes, recovery of director penalties, disclosure of business tax debts over $100,000, and legal actions including summons, creditors' petition, wind-up and insolvency action. Our debt collection activities prioritize those taxpayers representing higher risks and refusing to engage, Mr. Chaudhary said. That is why our initial focus will be on taxpayers with higher debts before including taxpayers with all other debts. Taxpayers with superannuation guarantee debts may be prioritized irrespective of their debt value. This is because the superannuation guarantee is an entitlement that is owed to employees. Taxpayers with debts are being sent to awareness letters, nearly 30,000 relating to disclosure of business tax debts, and more than 52,000 about the use of director penalty notices so far. The ATO says it has already issued nearly 300 intent to disclose notices and has started disclosing some of these to credit reporting bureaus, Equifax, and Creditor Watch. Regarding companies with outstanding obligations, the ATO is currently issuing between 30 and 40 director penalty notices each day. We've seen an encouraging response to our awareness campaigns, with a significant level of payments and taxpayers entering into payment plans, Mr. Chaudhary said. In fact, more than 220,000 taxpayers have already responded to our awareness letters by making payments or entering into payment plans. Meanwhile, the ATO has revealed the other areas it will be targeting this year, including a particular focus on double-dipping claims for work-related expenses. Other priorities will be record keeping, rental property income and deductions, and capital gains from crypto assets, property and shares. Nearly 10 million individual tax refunds were issued for 2021 at a total of $28.6 billion, with an average refund of around $2,900. The list doesn't contain any surprises, but is really a warning to taxpayers, particularly in terms of record keeping, said Mr. Chapman. It is essential you keep all your supporting documents to back up your deductions. The invoice, receipt, bank statement. It is essential you've got that before you claim a deduction because the ATO can ask to see it. And if you can't produce it, the deduction could be disallowed. Mr. Chapman said the ATO was not necessarily conducting more checks than usual, but they're publicizing the fact they're doing them more widely. There isn't really any excuse for taxpayers to be unaware of this, he said. In 2021, around 8.4 million Australians claimed nearly $19.8 billion in work-related expenses. The ATO is urging people to follow the rules for claiming, which depend on the type of job, individual circumstances, and whether there are the required records to support the claim. While some people make genuine mistakes, we do see people trying to gain an unfair advantage by claiming incorrect or false expenses, said Assistant Commissioner Tim Lowe. A mistake that we often see in tax returns is people claiming expenses twice. You wouldn't double dip your chip, so don't double dip your reductions. He added, remember, we use sophisticated data analytics to monitor for incorrect information, and you risk being audited or penalized for deliberately providing incorrect information. That includes claiming any expenses for which the taxpayer has already been reimbursed by their employer. If your boss has reimbursed your dry cleaning costs for your uniform, but you then claim laundry deductions on your tax return, well, you're picking your neighbor's pockets, Mr. Lowe said. During COVID last year, 1 in 3 Australians claimed working from home expenses in their tax return, and the ATO expects the trend to continue. But it says a common mistake is people using the working from home shortcut method to claim their working from home expenses and then double tipping, claiming additional amounts in their return for expenses such as their mobile phone and internet bills, as well as the decline in value of equipment and furniture. The shortcut method of claiming expenses is all-inclusive. Other options of calculating working from home deductions are the fixed rate and actual cost methods. Taxpayers can use the ATO's Home Office Expenses Calculator to help them work out which method will give them the best outcome. While the traditional methods require receipts, paperwork, and other record keeping, the shortcut method only requires a record of hours worked. Diary entries or timesheets will suffice, Mr. Lowe said. When claiming working from home expenses using the shortcut method, the amount needs to be included at the other work-related expenses question in tax returns with COVID hourly rate in the description field. If a method other than the shortcut method is used in later years and you want to claim the depreciation for an expensive purchase such as a laptop, the correct records for that item must be kept. Getting your tax return right is simple if you have the right records, Mr. Lowe said. Make sure you have your records before you launch your tax return and keep your records after you launch in case we have any questions. The easiest way to keep track of your records is with the ATO app. Even if you choose to lodge your tax return with a registered tax agent, it is still your responsibility to make sure the agent has all the correct records. Similarly, work-related car expenses are another area where people often double dip. One of the most common mistakes among the nearly 3 million people who claimed work-related car expenses in 2021 was people using the cents per kilometre method to make their claim and then double dipping by claiming expenses separately, such as fuel, car insurance, and registration. The cents per kilometre rate is all-inclusive and covers decline in value, registration, insurance, maintenance, repairs, and fuel costs. The ATO says it will also be taking a closer look at claims calculated using the logbook method to ensure they reflect people's circumstances coming out of the pandemic. You must choose your preferred method when calculating car expenses, the cents per kilometre or the logbook method, Mr. Lowe said. Just because there is a dip in the road doesn't mean you can double dip your car expenses. If you are a rental property owner, the ATO is putting you on notice to make sure you include all the income you've received from your rental in your tax return, including short-term rental arrangements, insurance payouts, and bond money you retain. We know a lot of rental property owners use a registered tax agent to help with their tax affairs, Mr. Lowe said. I encourage you to keep good records as all rental income and deductions need to be entered manually. You can ask your registered tax agent for assistance. If we do notice a discrepancy, it may delay the processing of your refund as we may contact you or your registered tax agent to correct your return. We can also ask for supporting documentation for any claim that you make after your notice of assessment issues. Capital gains, particularly from crypto investors, but also anyone who sells an asset, such as a property or shares, continue to be focused for the ATO. If you disposed of an asset, including non-fungible tokens, this financial year, you will need to calculate a capital gain or capital loss and record it in your tax return. Generally, a capital gain or capital loss is the difference between what an asset costs you and what you receive when you dispose of it. Crypto is a popular type of asset, and we expect to see more capital gains or capital losses reported in tax returns this year. Mr. Lowe said, "Remember, you can't offset your crypto losses against your salary and wages. Through our data collection processes, we know that many Aussies are buying, selling, or exchanging digital coins and assets, so it's important people understand what this means for our tax obligations."